Hello, my name's Emily Hearn, and I'm the Program Coordinator for the Asset Building Coalition of Mason County, where our mission is to promote financial well-being for all. This is one of a series of short, informative personal finance videos. Today we're going to talk about preparing financially for disasters. Now, there are two main categories of disasters: natural and artificial. Natural disasters include floods, earthquakes, hurricanes, wildfires, etc. Artificial disasters can include things like recessions, depressions, arsons, theft, and terrorism. Now, there are a lot of ways that disasters can affect our finances. They can affect our immediate needs, such as if our home is destroyed. We need immediate shelter right away. It also can affect our ability to get food and pay for food, because if our access to our banking accounts is compromised, the bank itself is compromised, or the cash that we have is destroyed. It can also affect what we have to pay for in terms of like repairing or replacing damaged or destroyed property, like your home, a vehicle, and furniture. There are also ongoing costs that can be affected by disasters. Can you still get to your job to pay for things like your food, your shelter? Are you going to have to find a new permanent home? Are you going to have to look into getting a new vehicle, getting a new job? Other ways that disasters can affect our finances are through scams. There are a lot of people who take advantage of disasters to scam people out of their identity or their cash by posing to be nonprofit organizations who provide help in emergencies, or contracting companies who offer great deals at fixing property for just a low starting fee. Identity fraud can also happen during disasters, such as if your ability to get your mail is compromised, or in the case of an artificial disaster, if your information is compromised on a database where it's kept. A disaster can compromise your access to your financial resources, such as if you can't get to your bank, or if the bank itself is destroyed, or if the cash you have on hand at your home is lost or destroyed due to fire or theft. Also, if electricity goes out and you are not able to access your resources digitally. Another factor that can affect our finances in a disaster is the penalties of missing payments. So, do you have your bills set up on autopay? If they're not, are you able to make that payment if electricity goes out, or if you're not able to get to the location to pay the bill? Also, is your job compromised? Are you able to get to your job? Or is your job itself destroyed and you have lost your income and you cannot make your payments on time? So those penalties, can include late payments, damage to our credit reports and scores, and the possibility of losing our property as they are used for collateral, such as for an auto loan or a home mortgage. Now, while disasters can be devastating, there are steps you can take to prepare for them. First is getting the insurance you need. Check to see what insurance you have and what's covered and what's not. Check to see where you live and check your risk factors. For example, here in Washington, we are prone to flooding and earthquakes, and many homeowners insurance policies do not cover these things. You may have to consider getting supplemental insurance. Also, get all of your property appraised. This allows you to at least get the monetary value back in case they are destroyed or lost in a disaster. Shop around for the best prices for what you can afford, but also making sure you're getting the coverage you need. Build an emergency savings fund. This can give you peace of mind and keep you out of debt in case of a disaster. And building an emergency savings fund can be a cycle. Emergencies happen, and when they do, it empties your savings fund and you have to start over again. But it is worth having. And it's a good idea just to start small and let it grow. But start saving wherever you can. Keep some cash in a safe place, like in a fireproof safe in a waterproof bag, or maybe a to-go bag in your vehicle, or a fake book in a bookcase, or a coffee can or jar. But only keep enough for a few days. You don't want to run the risk of losing a lot of cash in case of fire or flood. And just enough to get you back on your feet for a few days if you can't get to your bank or you cannot access your digital financial resources. Make sure your financial and personal documents are in a safe place. Again, a fireproof safe in a waterproof bag or a to-go bag in your vehicle. Also consider having digital storage on an encrypted flash drive or using a paid cloud service to store your personal information in a separate area away from your home. If you haven't already done so, consider taking advantage of your bank's online services and direct deposit from your employer. In case of a natural disaster, or if the location of your bank gets compromised or you can't get to it, you can still access your records online if you have electricity available, or you can get to a Wi-Fi hotspot. This allows you to make payments, monitor your income, and protect your information even if you can't get to your bank. Thank you for watching, and I hope this gives you the tools you need to create a financial plan for you to help you prepare for disasters.